All right, guys, let's see what you're saying. Okay. All right. So more than half of you are saying that this is a redistribution or a distribution. All right. So let's go through the bias. Here's our bias game. A range right here, and we're seeing how that fails. Interestingly enough, a spring type of situation going into the sign of strength upthrust, and it's been resolved as a failed upthrust, attempt to commit temporarily, and then a failure right away. On the way down, we have a lot of supply that's coming in, so the bias is definitely to the downside. On the climactic action, we're seeing a lot of buying behind this bar. So the open was with the gap down, and then throughout the whole day, there was a big rally that was unfolding. So that suggests that there is a presence of the demand. We want to see what kind of demand we have. Would it take us where? To which level could we come? So we are coming first to just a intermediate resistance level. And look at how we are not coming down, right? So that's a very interesting thing. So somewhere here we're thinking that only one day the price went down so low, and then it recovered so quickly. So there is definitely some demand behind this bar because of how quickly the price has recovered. And also look at the test. The secondary tests are so high above the actual selling climax low, and that's on the background of diminishing supply characteristic. And then after that, after the test, the price still creates an upthrust. So this is a lot of bullish activity that is happening. And I would say that at this point, we still would be anticipating the retest of the previous low. And that retest would either confirm or this bias is to be failed on this reaction. And this is something that you and we've been discussing about the bias game. The key is to have the correct bias by the end of the chart. So let's say that I'm not sure about this rally. It looks bullish. This looks bullish. The tests look bullish. The upthrust look bullish. But before that, there was a very distinct downward movement, down bias. So what do? Well, we say, I see bullish characteristics, but I'm not sure whether it's bullish. So I want either to confirm or I want this bias to fail. How would we confirm that bias? Again, we've talked about the character of the move. So what is going to, be the character of the move? Into the climactic action, we see a lot of momentum to the downside. We see velocity increase. We see supply increase. We see result to the downside increasing substantially. What is the character of the next reaction? We are not making the new lower low. We are making a higher low. Result is diminishing. We are diminishing the momentum, diminishing velocity compared to the previous move to the downside, as we see how the down spread on average has diminished characteristics. So we understand that the selling has deteriorated on this reaction, therefore confirming a bullish bias that we found on the way up. And if we are not confident, if we still think that the bias is to the downside, then we would be looking for the signs of confirmation of that bias, right? So whatever bias you have, you either confirm or you deny that bias. So here we're saying, okay, going into the reaction, the character is bullish, volume is diminishing, high, low, momentum is diminishing, and we're just retesting the low that we had before. We're not committing significantly to the downside. Okay, let's either confirm that or deny again. The next rally does not have a lot of effort behind it. So we're kind of expecting that it's probably gonna fail. At the same time, as we look on the way how the price moved to the upside, it's actually very encouraging because all of our reactions to the upside were not very volatile reactions. So that also tells us that in this case, we are observing both demand diminution and supply diminution, but yet the price is going up with somewhat limited result. Well, two thoughts that come to my mind just on that. First of all, we're expecting a reaction, and then we want to know what kind of character of the reaction we're going to have. And then secondly, we are probably in phase B. Why? Well, because this is the place where there's going to be exhaustion by both demand and supply. Why is that? Well, because of this action right here. This is a collision of two big efforts. One is demand, and behind it is some value buying, and one is supply, and behind it a very strong force, capitulation, general capitulation based on fear. Both are extremely strong. The value buying is strong because there is a lot of force behind it. There is a lot of intention and intelligent thought behind that buying, whereas general capitulation is almost always a herd mentality. This is where more primal thinking exists, and we are trying just to dump the stock at any cost. Okay, so we kind of thinking, yeah, we're in phase B. This rally looks a little bit more bullish than bearish, but because of the limited result, we're expecting a reaction. We want to see what kind of reaction we're going to have. Would it confirm or deny our bias, to the upside? We are temporarily committing below, and that commitment comes on even lower supply signature. So that is suggestive of a spring. Usually that type of spring with supply coming in, we need some kind of retest that comes on the next low, and we see that this is a higher low, supply diminishes again, and we are able to recover from that. So I would say that this is an accumulation bias. Confirmation of that would be overcome in 98. And here with the accumulation bias, we're thinking, okay, well, how would the price go up? So we're thinking tests in phase A, test in phase B, and then test in phase C. So we are going into phase D. We're going to have some kind of sign of strength. We are having somewhat of an apex formation. So a sign of strength does not have to overcome 108. It could really only overcome the downsloping line, and just to have that, sign of strength into 2008. So we're expecting a move like this into 2008, perhaps, and then some kind of backing up action, sign of strength, backing up action. Okay, could we confirm that with the volume, with the horizontal volume? All right, so we are seeing that supply increases here, here, and then definitely here. So this is our major zone where supply would increase. So probably 106, 108 is that zone where we would be expecting the price first to go into some kind of maybe even minus sign of strength, or out of the apex formation, we could say that this could be a sign of strength. Backing up action, and this is where supply might come, in a significant way. So we'll have to see what kind of reaction we're going to see here. The reaction probably to where demand started to increase, maybe to 100, something like that. So 106, 108, 100. So this is where supply is going to be the most. And then after that, because supply has increased, we need a test, some kind of test. And then after that, we're going to jump above 108, 100, and probably would come to this area right here. So 122 and 116, something like that. And look how supply is diminishing throughout these two bars. So this movement here should be very easy. So we should have some kind of momentum increase in this area. And then only here we should have some kind of hesitation with, let's say, the move to 116 again. And then again, smaller supply. So something like that. So we would be expecting this type of action. Well, what is valuable from this information? Well, first of all, gives us an understanding about the character with which the price is going to move. So it's still going to have some interesting spots where we are going to have some vulnerability, especially here. This is where we're expecting supply to come in a meaningful way for the first time. Because of this absorption of the supply, maybe this area right here is not going to be as problematic. Now also, decrease of the supply in this area right here is suggestive of the momentum move in this area between 108 and 116. So just to summarize, and to kind of think in terms of like, okay, well, what else could we extract from here? If this is the path, I could construct the whole trade. And this is just approximation. So I'm constructing an approximate path for my trade. One of the issues that I have with my current trade and, a commonality of my mistakes is all in the add-ons. How do I add to the profitable position? Well, it seems like we could define the tactics and, tactical scenarios as to where we would be adding to the position. I think that anything that we add in this zone right here would be okay, because this is the zone of point of no return. I think that this point here could be also favorable as an add-on, because this could be the lowest low as supply has increased. I also think that before this level right here, we could add another position. And here, the strategy should be highly leveraged plus short term. Why is that? Well, because if momentum is going to increase in the shortest period of time, we're going to cover the more distance. And then let's say after that, right here, there could be also a good velocity that we could expect on the way to the upside as supply might be diminishing. So anything really after the first backing up action is quite favorable for a swing trade. This is a favorable long-term trade as well. So I would be thinking on how to actually play that. Another possibility here is just to think about this possible supply resolving itself as a potential hedge. So you could, let's say, call sell premium, so sell call premium, or you could just open a short-term directional put position. Anything kind of like is possible in this area. So you're trying to find the way how to optimize your trading in this way, and how to extract the majority of the money, and to create the most efficient trading path. All right, well, let's see what's going to happen. All right, so here is the price data. Let's see how correct we were. We said that our first stop in action is going to be somewhere in this area right here. And we are yes, so we are going, so 10, what is it, 1010, 1010, and here is 115, 1010, and 102. Okay. All right, so we are kind of overshooting this area with the buying climax conclusion with the small distributional range. That leads to this reaction that has an increase of the supply. So that's probably that major sign of strength that we've talked about. We thought that maybe it's not gonna have overcoming of 110. It actually went higher to 115 to up to this area. So overcame this high, so that was a mistake. Then we said that this supply is going to have, that reaction into this area, into 100, and we are there. Okay, great. Then we said that out of the backing up action, we're going to break to the upside first. Because of this increase of the supply, we're going to have some kind of test. And then we're going to, because supply is so low here, diminishes so drastically, we're probably expecting the momentum move here. And it happens out of the feather on earnings, and we have that acceleration. So think about, again, that information that we were looking for as we looked at, horizontal volume. We were expecting a sign of strength, and we said supply is going to come. So we could actually sell short-term puts, or we could, buy short-term puts or sell calls here as a hedge to our main position. So we could extract some money here. We could extract some money from the premium as the price still recovers to those levels. You could do both. And then you could add to the position here on the lower low, lowest of them all here. Then you could add somewhere here. So add, and then we said anything here is going to be favorable for us to initiate the position. So 3 major points where we could open the position before the acceleration. And then we said that supply might come at around 122, 120. We didn't really see a lot of supply at 120, 122 that has produced some kind of meaningful reaction. But we definitely see increase of the supply in this area. It just has been vertically absorbed. And that's such an interesting indication of the bullish scenario where the price is, the volume is showing to you, you're going to have some supply here, increase of the supply. It did happen. But then when, again, I'm going to repeat myself, when supply increases, the tendency for students to think that this is bearish right away. Not true. Why? Well, because there are 2 ways of how supply can resolve itself. Through the absorption, and current market, current rally is kind of a really good example of that vertical absorption. And then, we could also have horizontal absorption as well, or some kind of reaction. There is no reaction here. The test is successful, and we said that with the diminished supply signature, this could be an area for a good swing trade. But this we wanted to avoid. This was the point of vulnerability. We knew that supply is going to increase right here. Is it valuable, guys? And if we're thinking about the character this way, and we're thinking through the trade, then we might compare possible trades that we have on the table. And we can say, in this stock, I would rather participate in this area, let's say, than stay in the position in this area right here. Unless you're a long-term investor and you started getting in somewhere here, then you would be thinking, okay, how do I actually protect my position? Could I hedge here? Could I have some puts? Could I have, sell some calls? Could I maybe sell a pair spread? Maybe sell highly correlated stock to this one, which is underperforming. All right, where are we? 5 o'clock. All right, questions, comments. Let's see. How did you deduce the higher low at 104 in that it would only react to 104 before continuing up? Is it on this one chart, Simon? Is it on this chart? Okay, so 104 and then react to 104, right? So I think that, when you look at the reactions, you basically looking where demand would start to increase. So let's say that you had the stopping action in the supply, you're thinking on the horizontal volume, okay, when is the next time when, demand would increase if we would have a reaction, if the price would go down? Well, somewhere here. So that was it. But I don't recall 104 here. What were we talking about? 104. Yeah, we said that we're going to have a move to 108. It overcame it to 115. Then we said that we're going to come back probably to around this area, so like 100. And then I think it came back to right about that time. Well, if the stop in action in the actual structure does not appeal to you with this type of technique, then think about at least the character with which the price can move once it overcomes specific levels of the supply, right? So for instance, this momentum move, this deterioration of the supply. So these are the spots where the price is going to move really fast, and you could, have an edge here. And we could kind of see that this edge has been persistent in this move. So this is from about 100 to 150, about 50% return in 6 months. All right, great. Let me see. I wanted to cement this a little bit more. Okay, so here's the choice, guys. We can do either one exercise on the bias, or we're gonna do the exercise on the horizontal volume. So which one would you prefer? Going once, going twice. Interesting. Everybody's saying horizontal volume. Okay. Fascinating use of horizontal price volume. Hope you had a wonderful Thanksgiving. Thank you, Sharon. Yes. Yeah, I had a really good Thanksgiving. Thank you, guys. I hope you had a really good Thanksgiving as well. All right, so let's go to stock charts. And what I thought that we might do is take any stock and then just to go through what we could possibly extract as the information as how the price could potentially move, uh, you know, uh, and use it as a horizontal volume signature. Okay, so which stock would you like to discuss, guys? Can just give me the symbol. A trade desk is good. Okay, yeah. Let's look at this. So look at where we are. This is the horizontal volume signature, and let me just get rid of this. Let's leave the momentum on. Let's get rid of the relative. Okay, so this is the whole data for this stock that we have over 3 years of data. And this is the horizontal volume signature on the last day, on the last bar of this chart. If I were to, let's say, look at the initial trading range that we have here, that volume signature is going to change because now it has less data, and the less data it has, the more change we're going to see. Okay, so let's just say that before the breakout, and this is where the usage of this particular technique is going to be limited. So for instance, as I'm looking at this IPO, and I'm thinking, okay, well, is this bullish, is this bearish? It looks bullish, right? So there is some kind of decreased volatility. We're seeing that in the volume signature as well. We're seeing that in the spread. We're seeing higher lows. We're seeing some kind of apex formation. So the only usage that we could possibly have in this picture is the levels of the resistance in this formation with the levels of the support. So we could be thinking that if we overcome this supply right here, which was so abundant, we're kind of seeing that trading range, right? So these are the boundaries where supply is increasing and demand is increasing. If we overcome that level, look at the next one. Supply is so low in comparison to the previous level. If we only would overcome that, we would be in a great shape. So supply somewhere here, supply somewhere here, supply somewhere here, right? So every time there is an attempt to overcome, supply is coming in. So supply could be seen in this bar right here, somewhere here in these bars, and then it's hard to see this volume signature, but in this bar right here. So this is where supply resides. This is where they're selling into the strength. But every time they sell into this level, what happens? We have more and more muted reaction, more and more bullish reaction, where from high volatility we go to the low volatility, and that confirms the bullish scenario. And look at how the price now resides at this level that we needed to test. So from here, the only conclusion that we could extract from the horizontal volume signature is that if we are going to have a break to the upside, it's going to have some kind of momentum behind it because there is no supply above it at all. And we would be looking for some kind of run up and then a climactic action. That's what we would be looking for. Okay, well, let's see how that changes. And I want you to see how the picture changes as the price, starts moving. On the last bar here, we have some supply coming in. Why? Well, supply tail, volume increases, and we know that this price level, it has that supply. So we're expecting, some kind of supply come in and stop in action. This is a really good bar for us as a test bar as well. We've tried to go up, still some supply is available, but we're not going down that much. Excuse me, guys. So I would say that as the price comes back to 32, there are multiple options to open this position. All right, let's kind of trade it. So here's this bar. Suggest what? Supply has come and there's no more selling. As there is no more selling, you could actually think that there is going to be a continuation, and this is actually a really good bar to open the position. Here is that continuation, and look at how everything is changes in the profile. The price goes above, everything below it kind of stays the same because now the volume on this bar does not influence everything that is below. Next bar has some supply, and that's why we have this red supply column here, horizontal column, to appear. Okay, supply looks to be substantial, and here is one of the mistakes that is very common in students' work. So, for instance, everything is identified correctly: bias, timing, and even the character. We might be saying that there might be some acceleration right here, but then supply comes like this, and students are saying, well, the rally is done because supply has come. Not true. What do we do here? Supply increases, two options: absorption, whether vertical or horizontal, or we're going to have some kind of reaction. What do we see on this bar itself? Did we close below the previous low? No, we didn't. So even though the effort has increased, we did not have the progression to the downside, at least yet. So we would be keeping this position. And if the price would have, again, some kind of rebound, this could be potentially be another way to enter this position or to accumulate more. And obviously we want something of like what we've had here, the bar that's going to cover the whole body. Okay, something like this, where through the intraday we could definitely enter on the way up to 33, 34, 35. Okay, here we probably would be just staying in this position. We've come up, multiple times into this position, and there's no reversal yet. There is some kind of gap in that suggests that maybe we are, somewhat close to the ending action. But this could be also a little bit of a runaway gap as well. Again, gap where we do have small supply, but it's not really that big. So we kind of see that the character that we were thinking is going to happen in availability of the supply would lead to the momentum move, right? And again, I want to quote our mentor, R.G. Wyckoff himself: judge the market by its own action. You can judge how the price will be going up from this moment if you understand how supply is being present, in this particular, structure at this particular price level. All right, well, something more significant here, and I'm not going to go bar by bar, guys. This is a different type of exercise. Let's just kind of like go to the next formation. So this looks climactic. This is probably where we would be thinking, okay, at least we're going to get out of the some of the size that we have, some of the, part of the position. Here we would be expecting maybe a stop in action, that climactic action, and this was a very nice rise less than a month, and we are traveling about what, about 40% or so, or even more. Yeah, well, not 40. So 30 to 40, yeah, 33, 30, about 30%. Okay, so let's look at the next trading range because that's what we want. Okay, so something like this, right? So we are looking at the next range and we are thinking, okay, what could happen here? There is not a lot of selling that is going on. We look at the horizontal volume profile, we're seeing that this is again kind of like the level that we were sitting in here, and supply is at the resistance, and we just need to overcome that level in order for us to have what kind of supply? Well, maybe just a small supply somewhere here on the way out, but then after that, we don't see a lot of supply. So that's our expectation, again, that we're going to have some kind of move to the upside. Selling is very, not present. So we still probably relying on some kind of momentum move right here, maybe of the same quality, of the same distance, maybe of the same character, maybe slightly different, but probably it's going to overcome this high, most likely, just because there's not enough selling here. And this could be another good short-term swing trade. Okay, let's just see where we would get into the position. So all of these last 4 bars are actually quite acceptable for opening the position. This is definitely a really good confirmation bar. It has some supply signature behind it, and again, we kind of expect that at this level. Why? Because of this supply right here. And then our next goal is going to see, at 42, we're going to have something more substantial. Really good bar next time. It just shows that supply has come in, it was not excessive, and it was observed. So could be an add-on right here. Okay, so supply is still present, and please note that how it came to 42, and had that supply tail. So supply is there. We could have maybe like a smaller reaction here, unless we just vertically are absorbing the supply that came on right on this bar, and these are acting as the test bars. If we overcome 42, you could add to the position here as well. Okay, so that reaction happens. We would not expect this reaction to go below, let's say, 37.5, 37. Okay, and that's a jump most likely on earnings. Again, here we are thinking, what do we do here? Most likely we're just closing the majority of the position. This was a big run. And it suggests a lot of the supply that has come. Once we have some kind of down bar here, we're going to have the supply signature on the horizontal level. We would be thinking, if we're going to have the reaction where we would become. So I would still allow the volume signature to develop a little bit more. And here it is. So here's that supply that came at this level. All right, and as we go through the trading range, you kind of could see how the volume starts to persist more in this area than, let's say, in this area or in this area right here. So there is more participation by institutions. And we're probably observing some kind of, potential attempt to spring here. At least that was the thought at that time. And what do we need to do in order for us to overcome this level? Well, we definitely need to overcome 54, 56. We need to overcome the supply. Supply is still present. But once we do that, then we could have a favorable continuation. If the price goes to 56, 54, and then comes back, that will become very bearish. Okay, so here's the sprint scenario is unfolding. This was, I believe, actual trade that I had. All right, and this was very interesting because the move to the upside kind of has the same characteristics as the previous moves, maybe not as strong as you would expect. So that was a little bit of a suspect, but momentum was showing that there is some buying behind it. So we're still going with this scenario. And the only decision here, would we be selling into the climactic action? We're thinking that this is a sign of strength, backing up action is going to be somewhere here. So unless backing up action support fails, then we would get out. If there's going to be a continuation, then we would add on. Okay, looks very favorable. Again, not that we could use the volume profile here a lot, but we are definitely in the know that between 57 and 47, there is a lot of both supply and demand. So if the price is to come back to this level, the action here is going to have a lot of momentum just because of how shares have been exchanged in this area. I'm gonna go bar by bar here. So again, favorable, kind of feeling like I'm reliving this trade again. Still favorable. Momentum is diminishing, and that becomes a little bit of the concern. And now we have the formation here that needs to resolve itself to the upside. If it goes below 60, that starts to jeopardize the whole structure a little bit. You still might be thinking, well, I could be in the backing up formation, so it needs to rebound off 60, and definitely don't have something like this, like a bar that commits below some support, or the bar that commits below the local support. We don't want to see that, and especially if the bar is going to have some kind of supply signature. And I believe that we were pre-earnings here. This was also pre-earnings, actually earnings right here. And we kind of, let me give you the history of this. Earnings, 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 and then earnings somewhere here, expectation, right? All right, let's see what happens. Here it is. That's the bar. That's what caused me to think about closing this position. And that was pre-earnings. I don't know exactly, how it came about. It's just I look at that, and it looked like there was more supply than I wanted. It looked like the momentum was not there, and that is during the pre-earnings. So we are not having a demand from institutions like we had here, we're having more of a picture like this, where we go nowhere pre-earnings, and then we have this type of bar that is suggestive that maybe we're done. So at least scale out some before earnings if the stock is behaving this way. There are other better ways of how the stock could behave. If that was not enough, then there is the second bar that is kind of giving you an indication that supply is there, supply is increasing. If we're gonna have on earnings some kind of negative reaction, then where would we go? We probably would just jump somewhere here or here. So here is our target 1, here's our target 2. So this is the way how, this could be helpful. The horizontal volume could be helpful. So 1 and then 2. So somewhere here between 50 and 42. It makes sense, this support level a lot. It makes sense for the oversold here. It's kind of like the next level where we had some demand. So let's see what happens. We are dropping on the earnings reaction right into the 50 zone, and that is that logical zone where we had some demand before. Demand actually came on this bar, and this is where a lot of the reaccumulation has happened, also right here in this area. And just a side note on that, I think that we should follow the advice of Wyckoff himself. And I keep repeating this phrase: judge the market by its own action. It's always as if Wyckoff was saying that all of the information is given to you already as to the way how the price, what price will do and how it will do so. So in this example, we are seeing, this reaccumulation pattern, and in some instances, we would probably say that reaccumulation happened from phase A to phase C. Not necessarily. Sometimes reaccumulation could happen in phase A, phase B, and then nothing happens in phase C. Sometimes phase C is more important. So we really have to think non-linearly about how accumulation or distribution happens. It could happen in so many ways, and so many different stories that could have, be created, as a Wyckoff story. All right. Well, let's see what happens next really quick. All right, so we're still going down. We go to that, next level. Look at the horizontal volume, how the profile changes. We still have this 55.45 as, an area to overcome. Either way, this is the highest volume signature in this area. If we're going to go up, we want to be buyers. If we're going to go lower, we want to be sellers. This could be just an oversold condition and could go up, and this could be a sign of weakness and then LPSY. What is the best to figure it out? Wait for the test. Okay, definitely a test. Right on this bar, you kind of could see that the price temporarily committed to the downside and then quickly rebound up. We see that the momentum is increasing and improving, volume is improving, so there is some kind of synchronicity with which the effort comes and the price moves up. This could be the beginning of the next move. Now, because of the supply, we might have more retesting, so we might have more consolidation in this area. So we're not immediately attracted to this, although momentum behaves really well. For the long-term investor, you could consider this even in phase B, because you're not that concerned about the stop losses. And that's why the short-term swing trader would rather wait. The long-term will just have like a small partial position at this point. Okay, really good development here. This is a synchronicity bar, and we are on the momentum close to the zero line for the second time. So this is where we could start moving up in a better way. So this is where the swing traders might come. This is where the long-term investors could potentially add to the position. Another day where we could potentially add. So this day suggests some supply is present, but we kind of know this from, this red bar that we had before and multiple other red bars in this area. We know that supply is coming in, but look at how on that supply, incoming supply, the price actually is holding up nicely. So unless more supply comes, then it could, dominate the price to the downside. Otherwise, it will try to overcome. And there's not a lot of momentum here on the latest rally, so we should definitely be a little bit cautious. But you kind of see how we're approaching this. We're scaling in carefully. Yeah, so not necessarily the best, you know, price action here. So anything above, let's say 51 would be a really good call to the upside. But this type of move also suggested that maybe there's going to be an attempt to 45 as a retest. Okay, good bar here. Really good bar here. If it breaks to the upside, we could add more. Again, supply is less. So there is some kind of absorption that is going on here. Again, I wonder, if this is a bullish case scenario and then we're seeing some kind of attempt to shake out at the end, or we're going to have like more of the explosive move. So let me just show you the bars that we've talked about. Okay, so long-term investor, short-term, long-term, another add-on, and possibly as we overcome this level somewhere here. If the shakeout happens, I think that our conviction is too strong, so we can get out of this position. Okay, so breakout on the upside, that's another way to add here, and then we should wait. And here, what's important is now we could use some horizontal volume signature. So we know that there is a lot of supply here, but then after that, diminished supply, diminished supply. So maybe some increased here. We would be expecting an increase right here on this volume signature. So we just need to overcome this area of 52.5, where there is a lot of supply. And then after that, relatively quickly, we should come to the high of 56, 57, and most likely this time we're going to overcome it again like we did here, we've done here, like we've done here. So just overcoming it, and then again, we need to see what kind of supply we're going to have at which point. So at this point, we don't know because we don't have the horizontal volume signature above 67. Let's see. Okay, I wonder if this is that shakeout. Here we go. So very interesting bar right here. What would we do, right? Let's say for the long-term investor, this is of least concerns. Why? Because we have this volume signature, and then this is the supply that comes in. Plus it has a tail. It tried to spring, and it sprung below phase B low. Now it kind of makes a lot of sense that probably it's like this. It's not a sign of weakness because we would want the commitment below this level. And the way how it acts, it's more springy rather than, a sign of weakness. Again, the volume signature. No momentum to the downside, at least that much. So we need some kind of confirmation. If we're going to have some kind of confirmation here, I think this is another add-on for a long-term investor. And then as we overcome 52, this could be another add-on for a swing trader. And if we're swing traders, and let's say that we are, 2 units of risk into the position, how do we deal with this? Well, if our conviction level still is high, then we need to see some kind of test of the last bar. Would we have a more bullish bar next? If we do, then could we get in? Could we jump into this? And then could we overcome this supply level? Because remember what comes next. Momentum comes next. All right, let's see what happens. Good bar, there is no continuation to the downside. Volume comes, there is not enough to put it above the previous bar high, but it's enough not to produce, that type of sell-in. So let's see what happens next. Not a favorable bar does not, negate, our bias. We would need to be closing maybe below 43. Okay. Also not the greatest of the bars, but again, it just kind of keeps us in this position. And here I would be, doubting the whole bullish case. And here, maybe even just considering scaling out of this long-term swing. I'm sorry, swing position. Long-term still we would stay on. Yeah, a swing position here probably would be closed. But the move to the downside has those bullish characteristics, right? So it has that tail, and look at the spread. It's not that impressive. And it still looks like a spring and then a low test on the diminished supply. All right, well, probably swing will be gone here. Even on bullish characteristics, I don't think that we would be able to hold on to those 2 units. But the long term, still pretty much in the position. Favorable bar, most favorable bar, swing trader might come back. If you have the mental capacity to come back to the trade, let's say after you lost, then this could be a potentially really good trade. So the key here was, again, a little bit too early on the swing if we're thinking that this is phase B, expecting some kind of shakeout after this type of character move. Maybe not coming in on this bar would be also a solution, where the breakout is not confirmed. And then I still would prefer to get out of the train that is kind of like going down and then to re-enter here. It's just a better entry, much cleaner entry. I know that you're taking the loss there. You could potentially go through this whole formation and then find that place again and just add. But if I'm adding, I'm definitely adding above of what I have. I want my positions to become profitable first. But if you don't have the position, okay, your assumption is phase C, confirmation, and then again, we're talking about the volume. Where is supply is increasing? Here, and then after that, decrease of supply, increase of the momentum. So you could add on this bar, test, couple of tests. You could add on this bar on the intraday picture. Now it becomes more apparent that it was phase C. It was kind of like a spring action. Now we're in the sign of strength. We are not hitting the resistance yet. So all of these bars are going to be okay to add. All of those, actually this one as well. So this whole move from 43 to 50, you could literally add each dollar. All right, some kind of supply. Well, let's see what happens really quick because we're already at 5:30. Okay, a move to the upside. We overcame that supply, and then we were expecting some kind of reaction, right? And then a continuation on the momentum. Did not happen this way. So what is going on here? Let's say somewhere here. Right. Okay, so here we're thinking a sign of strength. And it's interesting that this bar should contain a lot of horizontal volume signature. So, but it comes more as the demand rather than supply. So this is actually an interesting but good sign. I would interpret it like that. Happens on the momentum, so that's great too. And then we're still going into the area that has some demand behind it. This is the next one, 42, 47. So long-term investor would stay in. Short-term, a swing trader might consider getting out somewhere here. And that would be a very, short-oriented swing trade, still profitable. Okay. All right. So here we're still kind of like in this area of the demand and the supply. But again, once we get out of this, that's when we're going to have that acceleration, which happens. And these are all 4 or 5 bars that could get you back into this position. Earnings, and here's that momentum that comes in. And this supply that has been residing in this area had multiple times to be observed. Here, and slightly here. Then there was some supply around this area right here, some here, and then before it went up. So all of this has been information where a supply that came before occurred again on the earnings and required this much time to be observed in order for the price to start moving up again. And it only moved on the excitement. It only moved on that earnings report. So it had to be some kind of catalyst to move the price like that. All right, guys. Well, as you could see, obviously, we need to train our eye, to see those things. We need to train our minds to understand the concepts behind this type of tools. We need to understand the benefits of these tools, how we can use them, what kind of edge we can create, and definitely something that is not necessarily highly intuitive. You have to spend time with this. And again, I'm not insisting on you using the horizontal volume signature, but I am extremely insistent on you understanding the concept and seeing this concept on the vertical volume bar chart, and kind of expecting that you're going to have areas of the resistance and support based on the availability of the supply and the demand in certain periods, at certain prices. And we kind of gone through this multiple times today, so hopefully it landed well. Hopefully you guys seen the benefit of this. And next time you're analyzing the chart, think about these concepts. Think about how you could extract the supply-demand presence information from the vertical bar, and then project that into the future of your analysis, and that would be very helpful. All right, guys. Well, with that, we're done for today. We have 2 more sessions, so I would like you to start thinking about the questions for the last session on the 17th, session number 15. Send me those with charts, and I will start creating, a whole file for us, to go on that day. Could be questions about the methodology in general, could be questions about the market, specific stocks, could be questions about specific concepts, ideas that we discuss here, or in references to our past exercises. All right, guys, well, with that, I will either see you tomorrow at WMD, or I will see you next Tuesday. Thank you, and bye-bye.